Hey there, Canopy Growth traders and investors. This is Rod with Pow Group. Welcome back on the Pursuit of Wealth. It is Friday, August 5th. Hope you're well. Happy Friday. And in this video, going to be discussing the stock Canopy Growth Corporation. They just reported their Q1 2023 financials, and they missed analyst estimates in terms of revenue by about $3 million. They had a huge miss on EPS. That was atrocious. And the stock was down about 7% pre-market. So if you were hoping for Canopy Growth to kind of continue the bullish momentum we've seen in the MJ sector, fortunately, it doesn't look like that's going to be the case. Stock down almost 10% pre-market. SPY, the S&P 500 is holding up relatively well, but could spell some trouble if we start to see any broader market weakness as well. We'll get to it here in a moment, but before we do, make sure to smash the like, help support me in the channel. It doesn't cost you anything. If you're new, you can subscribe and tick the bell to be notified on any future updates. If you want to get a hold of this, you can go to CEDAR company profile for Canopy, and this will be the first document on that list. So Canopy Growth reports for first quarter fiscal year 2023 financial results. Q1 2023 net revenue was flat compared to Q4 2022. Company maintained number one. Everybody's always number one in something. Share of combined premium flower and pre-rolls. Increased share of combined mainstream flower and pre-roll segment by 35 basis points to 4% in fiscal year 2023 in Q1. International medical MJ net revenue approximately doubled versus Q1 2022, driven primarily by strong sales in Israel and Australia. Record BioSteel revenues in Q1 fiscal year 2023 increased 169% versus Q1 fiscal year 2022. Secured retail agreement with Walmart stores covering 2,200 stores in 39 states. Entered partnership to become the official hydration partner of the NHL and the NHL Players Association. They also signed a deal with Blue Jays' Alek Manoah. I did videos on both of those if you want to check those out. I did a video on Monday as well saying that I wasn't really expecting much from this report. And then because of analyst estimates being so bearish, and everybody else being so bearish, I said that it wouldn't take a huge beat in terms of those analyst estimates to see a surprise move in the stock. But unfortunately, we missed on both fronts, and it's not looking like this is going to continue the bullish momentum that we've seen in the sector. But net revenue was 110.1, and we were expecting 113.26 million. Again, this is all in Canadian dollars. And EPS was forecasted at negative 0.285. If we go down here to the EPS, it was negative 5.23. Massive. Yikes. Wow. What a massive miss in terms of the EPS. If we take a look at the quarter for last year, at this time last year, it was positive 0.84 on the EPS. You can see here, August 6, 2021, positive 0.84 versus a negative 0.25, so a huge beat. But they had a pretty big miss in terms of revenue, and they have been sliding. They had that one bounce back last quarter, but went from 140.97 million down to 111. So this is why I've been very bearish on Canopy, is because they're losing market share, and they're very reliant on U.S. legalization. I did a video on this as well yesterday. The key differences between among LPs and other MJ companies. You should check that out. But Canopy is very much in MJ reliant on the U.S. legalizing with their deal with acreage. But like I said, they only missed revenue by about $3 million, so it wasn't a huge deal there. But EPS, massive miss. And stock was down almost 10%, about 7% last time I checked pre-market. But the S&P 500, like I said, if we do see any weakness in the S&P 500, that could spell trouble and more headwinds for the stock. But Goodwill Impairment, the company recognized a non-cash Goodwill Impairment of $1,725 million. Wow. So net loss, adjusted EBITDA loss in Q1 fiscal year 2023 was $75 million, an $11 million increase in adjusted EBITDA loss versus Q1 2022. Primarily driven by the decline in gross margin, partially offset by the reduction in our total SG&A expenses. Cash position, cash and short-term investments amounted to $1.2 billion at June 30th, 2022, representing a decrease of $0.2 billion from $1.4 billion at March 31st, 2022, reflecting primarily EBITDA losses and the upfront payment made as consideration for the options to acquire Jetty Extracts upon federal permissibility of the U.S., right? So full-blown legalization. I mean, Canopy Growth has a ton of good brands and things like that, but like I said, they're really relying on the U.S. legalizing, and the sooner the better for a company like Canopy, right? But they have some really interesting segments and brands. You can see here, Stores and Bickle I mentioned this in my video yesterday from the differences among some of our Canadian LPs. Canopy is a very different business compared to, say, Tilray. Tilray's into alcohol. Tilray's into distribution, wellness, and MJ versus, a company like Hexo that only deals with MJ. Whereas Canopy has, BioSteel, Storz & Bickel, so it's a manufacturing of vaporizers and things like that, different paraphernalia and utensils. But Storz & Bickel was $15.6 million. And BioSteel 17.9 million, which we know they have a majority stake in that one. So again, all that gets reported on here, but you can see that there's a ton of different segments that they have, and not really, comparable. They do have retail as well through Tokyo Smoke, so that it's not really comparable to a lot of our other LPs. I think a lot of these companies are drastically different, and they are all building the foundation for global domination and expansion into the U.S. specifically, right? We know that's about a $100 billion market. Even Tilray CEO Irwin Simon said that he believes it's about a $100 billion market. And even if Canopy Growth can get 5% of that, right? We know they have about roughly 5 to 7% market share at the moment in Canada. And like I said, very heavily reliant on the U.S. legalizing. And if they do legalize, they could see the acreage deal go through, and then that would be very, very good for the stock. So again, I was very, very bearish on CGC over the last year because of the slide in market share, and because I didn't see that trend slowing down anytime soon. They're probably not going to be profitable until late 2024 or 2025, if that. But huge impairment there in terms of goodwill, massive net loss. We had terrible EPS, miss on both. This isn't looking good. We were looking at a potential cup and handle, but we negated it because we didn't get quite to our neckline there. We were forming a bull flag here on the daily time frame, but we are negating that bull flag here with this pullback here pre-market, losing the low of yesterday, decreasing the odds that we could see that bull flag and more upside continuation. We could still see an EMA 12 and 26 bull cross. So best case scenario for bulls is that we see the S&P 500 start to gain some legs and not see any pullback in the broader market, because if we do see that, that would be headwinds. We would rather see some tailwinds and kind of cushion this blow and soften the landing, because this is pretty atrocious. Like I said, in terms of, I wasn't expecting much, but like I said, because of how bearish they were on the analyst estimates, we had 129 forecasted last quarter, 113. I didn't think it would take much to beat it. But again, as I said in Monday's video, whenever I said that Canopy was reporting earnings on Friday, I said I wasn't holding my breath. I wasn't expecting too much. I wasn't bullish on these earnings at all. But wow, yeah, I didn't expect that in terms of EPS, goodwill, net loss. Definitely seen better days for Canopy. But like I said, the only good thing that we can potentially take from this is that once federally permissible in the U.S., Canopy is set up for a massive rebound. Going to end it there, though. Thanks again for joining us on The Pursuit of Wealth. It's Rod with Powell Group. Let me know in the comments below what you think of these earnings, what you were most surprised about, if there's anything good or bad, what was the most the key takeaway that you found from the report, even if it's good or bad. Always love discussing both sides of the coin. All right, going to end it there. Thanks again for joining us on The Pursuit of Wealth, and we'll see you in the next video.